Good evening, ladies and gentlemen. I'm Joe Kinahan, Chief Derivative Strategist for Thinkorswim, and welcome to our end of day and end of quarter wrap-up for Tuesday, March 31st, 2008. Well, when we think about today, love might not have been the drug, but drugs were all over the news today. We saw Schering-Plough and Pfizer getting absolutely annihilated today on news of a cholesterol drug that didn't test well. And because of that, because of some of the bad things that came out said at a conference today in Chicago, those stocks were absolutely hammered. In fact, when we look at the Dow today, the Dow is actually up on the day, up fairly nicely, up almost 47 points. But it was really held down by one stock, Merck. In fact, there were 24 advancers today, only 6 decliners. But Merck was down over 14%. That was the real weight on the Dow. We saw these stocks trade 15 to 20 points over their normal volatilities. Big buyers of strangles, which is buying the call and the put, just out of the money call, just out of the money put, as people believe that we're going to see continued movement, continued volatility in these stocks. So it bears watching over the next few weeks to see what happens in the drug industry, to see how these stocks will move as more news continues to hit the press about what's actually going on with these clinical studies. All right, let's take a look at the bigger picture. Let's take a look at the market overall today. As you know, we always talk about these E-mini S&P 500 futures, and today they were up just about 5 points. They closed at 1324 even on the E-minis. So, as we've talked time and time again, 1333 is the level they have to go above in order to kind of break out of this range to the upside. And on the downside, there's plenty of room. As we've talked before, many people think we'll go back down to the 1250 level even. The VIX stays above 25. That's our magical number, as we've talked about. This 25 to 30 range seems to coincide with the E-mini S&P 500 range, as it should, because the VIX, as always, measures fear. And as long as we're in that range, the volatility stays in that range. If we go higher, volatility will lessen as people will have less fear. If we go lower, volatility will increase, probably go back and test 30 again. So we have to see what happens there. For the market on Tuesday, what are we looking for? Well, one of the things we're going to look for is construction spending, which comes out at 10 a.m. Eastern on Tuesday morning. I believe will set the tone for the day. You know, the housing market is so carefully watched, every number that comes out right now. So that bears watching. Be careful if you're going to put on trades right around that time during the day. You might want to see how things shake out. As always, though, on Friday we have unemployment looming. It's always the biggest number of the week when it comes out. This week should be no different, so that's the magical number that everyone's keeping their eyes on no matter what they're trading early in the week. They're setting up knowing that unemployment comes on Friday. All right, as always, good health, good trading. I hope if this wasn't a good quarter for you, that next one will be much better. Remember, you still got 3 more, so if things haven't gone well, don't get too discouraged. I'm Joe Kinahan, Chief Derivative Strategist with Thinkorswim. As always, thank you for joining us, and have a great night, everyone.